podcast is provided for informational purposes only and should not be relied upon as legal, business, investment, or tax advice. All opinions expressed by podcast participants are solely their own opinions and do not necessarily reflect the opinions of RCM Alternatives, their affiliates, or companies featured. Due to industry regulations, participants on this podcast are instructed not to make specific trade recommendations nor reference past or potential profits, and listeners are reminded that managed futures, commodity trading, and other alternative investments are complex and carry a risk of substantial losses. As such, they are not suitable for all investors.
Welcome to the Hedged Edge by RCM Ag Services, where we're getting out of the field and onto the mic to bring you weekly market updates, commentary from commodity experts, and monthly interviews with the biggest names in agribusiness. Welcome to this edition of the Hedged Edge. I'm your host, Jeff Eizenberg, and today is going to be an exciting opportunity to really just talk to our RCM Ag Services esteemed research team to run through the latest USDA report and to give some interesting opportunities to discuss the next few months and first quarter of 2021. Today, I have with us Jody Lawrence, who's the head of research on the grain side of the business. We've got Kevin Bost. Kevin is a director of livestock and commercial hedging. And we've got Ron Lawson out in California with us. Ron is the head of cotton trading. So we're really covering all the gamuts today, all the markets. I'm going to try and keep it short and sweet, but let's have some fun here, guys. So welcome to the show.
Good to be here.
Thanks for the invitation.
All right. Well,
I got nothing better to do on a 67-degree sunny Friday afternoon at 2:00.
That's what I want to hear.
You did tell me that your golf game, you plan not to play again this year. So I wonder how much are you holding true to that, Jody?
I have not played I've not played in December. So I may be able to make it, but it's a little bit like saying you're going to quit drinking. It's far easier said than done.
You got to remember, Jeff, there's a beer out there with my name on it somewhere. So let's get this horse going, huh?
Yeah, that's right. That's right. All right. Good. Well, we had the report yesterday, the December 10th report. A little bit of a snoozer in the grains and livestock side. Ron, the cotton was a little bit more exciting, some pop, some movement. But let's start in the grains, just kind of get that part over with. Jody, give us a quick breakdown. What stood out to you? What was interesting with the report? Anything of substantial interest?
Well, on the grain side of it, it's like you said, they made almost no adjustments to the size of Argentina or Brazil's corn crops. Nothing material, put it that way. And corn stocks were about 11 million bushels, which is a rounding error. The USDA can find that in a seat cushion. So that wasn't really a surprise. And the one thing I guess I was a little surprised about is that the world stocks did drop a little bit and even below where we thought they'd be. So corn not as dynamic as beans, certainly not in this report. But if it hadn't been for the last, everything that's happened since August and the rallies of everything, the December report is almost always a snoozer. So to me, the big news, the biggest news out of all of it really didn't happen on the report. It came out that Russia is going to impose a $30 million ton tariff or export tax on their potentially on their sunflower oil and their wheat exports, because they've got some crazy food inflation happening internally in Russia, and he's trying to head that off into the winter. So
well, I got to ask you, Jody, you just did the math there, $30. I saw something said 2,000 rubles. I mean, either you're really good at math or you've got a calculator that's, already set to Russian rubles. So how did you figure that one?
Well, I'm big on knowing what the currency exchanges are because they paid me to fix the election. And so I can tell you down to the penny what the ruble to US dollar ratio is. But No, I saw that from somebody and from one of my analysts. They figured that out, and so it's significant because it comes out to, I believe, if I'm doing all the reverse math right, about a 70-cent increase in cost of buying wheat from Russia as opposed to other world sources. So that's significant. And what the biggest disappointment yesterday was the trade's reaction to the bean numbers, because beans were up 15 to 18 cents right before the report came out. And the report was really, when you talk about 7 million bushels of beans, again, it's not a material amount in the bean stocks, but the USDA did not increase what they think about export demand. And so you had beans go from up 18 to at one point we're trading down 8 to 10, and they had a huge, even more than that, they had a huge 35-cent range day, which for beans is not a surprise on a report day, but for everybody to give up that easily simply because they didn't get some really, really bullish news is disappointing if you're a bean bull, because you need to see this market break out. And I understand why it broke, because of the rain over the past 10 days in Brazil and Argentina, but there's still a demand story out there that you can't just trade weather in this market. If you're, you've got to look at all the factors, and the reality is that the world needs to do some demand rationing, and beans, right here at 1150 to 1170 aren't going to do it. What I think is happening.
We've got a chart up here on beans right now. Again, we record on YouTube, but also on the podcast, so we kind of have to describe for people that are listening. Obviously we know the beans have rallied, and we've got a chart here that shows this massive rally. And to your point is, ultimately, are we going to see this market break out even further to the upside because of this demand, or are we going to consolidate? These become questions that not to break off what you were saying, but you've done a great job kind of tracking this for the last few months. How are farmers going to potentially adjust their planting intentions tied to looking, just looking at the charts and talking about price? You've got soybeans. Currently, this is current crop, not new crop, but 1164. You've got new crop around 1050. You take a look at the corn chart here. The current crop 420s. New crop is what, 405, 410? Where are we at there?
412, I think it finished today. 412
today. Maybe if you could just talk a little bit about that. I mean, we're looking at these charts and where things have gone, and how are people going to start to think about adjusting their planting intentions?
Well, the profitability matrix ratio, however you want to describe it, if you look forward into spring U.S. planting, unless you have some kind of sketchy bean yield ground, they have, in some places, I've done the math for a bunch of farmers, anywhere from a $50 to $100 per acre additional revenue, net revenue, not just
on beans right now. Is that what you're saying?
On beans right now. So when you figure that out, if I can make, just take 1,000-acre farmer, somebody that's farming 1,000 acres of corn and 1,000 acres of beans, and isn't married to their rotation, which I realize that most farmers, a very high percentage of them are. But if you could switch bean and instead of making $100 an acre on corn right now where we sit, and with the possibility of a huge yield year to get that extra 20 bushels per acre to help push your numbers up close to beans, if I'm going to be putting $750 an acre in corn, as opposed to really aggressively managing a fungicide program in beans and really pouring all of the fertilizer to it, and maybe get to $375, $400, you're making more money on taking a significantly less upfront capital risk.
Right.
And that's where I think you're going to be able, I'll be shocked if we, or something very, very strange would have to happen in the next 4 months for us not to plant 90 million plus acres of beans.
That's interesting. And I want to actually bring in Ron to this discussion too, because Ron, here's cotton. The cotton chart is also challenging for, upward pressure, and also going to be challenging for acres. Cotton sitting at 74. We're on some highs from this long-term trend. At the end of the day, there's also the discussion that farmers, you can't just miraculously change over to a different crop today. You've got rotation plans that you've put in place for a number of years. You've got nitrogen and fertilizer tool, regiments that you have in place. So, Ron, maybe give us a sense where you think things are in relation to cotton and also these other markets. And then anybody would love to hear your comments on, yeah, great to make more money, but what about the fact that I've already got a plan in place?
I think we're expecting at least a 10% decline in cotton acreage in the coming season, and it could go significantly higher, that reduction. Beans and cotton are fairly easy to switch back and forth between for most of the farmers in the Mid-South. Okay. But then there's a couple of things to consider. Number one is if you have a gin, you got to plant some cotton. Remember the old business school, you got a fixed cost, variable cost, you have to be able to spread that out. Equipment, if you got a picker, that's $250,000 sitting there, you're going to have to utilize.
Right. So, real money.
Yeah. In Texas, they plant and pray. They pray for rain or they pray for drought and an insurance check, right? So they're going to plant cotton regardless. So you're going to get a certain amount of acres no matter what. But when we look at the marginal guys, it can go either way. Going into beans is it's a mathematical decision to make. One of the restricting factors might be where are you going to store it? I know there's been a lot of increase in on-farm storage over the last few years, but in reality, we could store twice the size of the U.S. crop in cotton, no problem. There's plenty of cotton warehouses. But if you start to really make a wholesale shift into soybeans, and this is Jody, you'll have to tell me, do we have enough room to grow that many more beans at harvest time? What are you going to do with them? The old store them outside under a tarp like they used to, or so that's something that will come into it. But in general, for cotton, we expect to lose acres next year at these current price comparisons.
Yeah, Joe, do you have any thoughts on the any thoughts on the storage capacity and ability to actually, get it out of the ground and then get it to where it needs to be?
Well, I think the storage capacity, it would become an issue if Brazil and Argentina get timely rains and they have a trend line crop this year. That still doesn't solve the long-term problem, and that long-term problem may not be resolved for another 18 months. But the shortage and the increased demand from China, now that they're repopulating their hog herd and they've made significant changes to how and what they can feed them, that my initial thought on it is that if everybody is waiting for the U.S. harvest of beans on September 15th, that they're going to want and they're going to price just like this year, where the market becomes inverted and there's no carry, and they will force all the farmers to say, I don't want to store it, and when I can deliver it now for 10 cents better or 5 cents better, whatever the case may be, than January or first half of 2022. So to me, if we are truly still in a worldwide supply and demand pinch in beans, the storage issue doesn't become important, simply because the basis will be so good and the market is going to be screaming for those beans right off the combine.
That's good. That's a great perspective, and kind of dovetails us a little bit into some couple inputs from Kevin. Kevin, Jody just mentioned the rebuilding the hog herd. Again, this USDA report, which we're kind of keen to talk on, but didn't really have any much impact for meats. But what does is these upward highest corn prices and soybean prices. Give us a sense, Kevin, where we are in terms of how some of these higher prices over the last few months ultimately find their way into the price of the meat, pork, beef, the different trimmings, etc.
Well, it has, first of all, it has a more immediate impact on the hog supply than it does the cattle supply. It takes a long time for higher feed prices to work their way all the way through the cattle herd. I mean, years, And the hogs, this whole run up in the corn market has been what I'd call a shock to the hog producer, more of an irritant,
More of an irritant, is that what you said? Kind of like an itch behind the ear.
Yeah, right. I mean, you just getting one sore healed up, and the corn market, brings along another. You look at what hog producers have been through. Really dramatic stuff in the springtime.
Yeah, I mean the COVID scenario was uncanny in the way in which it impacted the processing plants and everything else. So yeah.
It was incredible. It was absolutely incredible. I mean, you had hog producers destroying pigs, newborn pigs, which I don't think it's ever happened to this scale before. So that really hit the hog producers hard in April, May, June last year. So that had already impacted the breeding herd 6 months ago. So we're already headed into smaller supplies. By the way, this has been kind of a big mystery all along, ever since the packing plants shut down and the hog and cattle supply started back. It's been a big mystery. What is the hog supply? And it's remained a mystery because...
Who gives us that transparency? It's supposed to be the USDA, right? They're supposed to tell us where we are.
Yeah. Right. And what's made it such a big mystery is that the USDA estimates both in June and September were obviously arc. Fourth quarter hog slaughter to date, we've gone through 10 weeks, I guess, of the fourth quarter, and the kill's been down 0.5% on a fairly consistent basis. So the hog supply, you probably can safely say, is about the same as it was last year right now, and headed downward. I mean, this next Hogs and Pigs report, I don't know if it's next week or week after what today is, probably going to show a 2 or 3% decline in the breeding herd. To get back to the point, hog producers have not been doing so well. Been hard. The hog prices have been really volatile, but for the most part, they've been either at or below break even. And so this big run up in the corn market is not going to change anybody's plans, I don't think. Okay. Because you got a lot of overhead in buildings that you have to keep full. But
listen, every time I go to Costco, the price is different, and it's just kind of like the gas station. When crude oil is high, price goes up really fast, but when it drops, it doesn't really ever go any lower. Yeah. So I don't see my Costco bill going down.
Yeah. Well, eventually they will. They always do. But anyway, this is just kind of another stick thrown on a fire that's already burning. And so, the hog producers, some will have to cut back, some will have to liquidate. And I know Tom and I have talked to a couple of big ones who are being forced to do that. But the direction of the hog supply was already down, and this the corn market's just not going to change that, I guess.
Right. Interesting. Okay. Well, I guess we will still see how that plays out and starts to creep into the prices as we get into the Q1, Q2. I mean, the other thing is there's a lot of idle capacity, right, in the plants at this stage due to COVID. And is that going to potentially increase let's say we get back to normal, more normal, where vaccines going and et cetera, is that going to then hopefully allow for faster processing and more efficient processing, Kevin?
Yeah, I think so. Because the main slaughter capacity, both hogs and cattle right now, is labor. We just don't have enough people in the plant to run it at what used to be 100% capacity. Now that will improve, presumably, as we get over the hump with the COVID. In other words, there will be more people who will be willing to work in a packing plant. Right now, it's, I think a lot of, first of all, there's a zillion people that work in a packing plant. It's really labor intensive.
Right.
But it's been a problem of people being afraid to go to work in a packing plant. They'd rather go to work somewhere else because they know the risk of infection is higher there. That'll change eventually. So yeah, I think that will add to the practical slaughter capacity, both beef and pork. And it's actually bullish of the hog and cattle prices both, because you've gone through a period here where the supply of cattle, the supply of hogs actually exceeded the slaughter capacity, and that'll flip over sooner in the hog market than it does in the cattle. But even in the cattle market, probably by March or April.
Okay. So a lot more to think about what's to come in those markets for sure. Gentlemen, this is kind of a question going out to the group here. I'm going to put up a chart from Ron that he published in today's research report that he publishes daily. And this one here has a lot to do with global demand for commodities. It's really two different charts. One, on the left is projected GDP growth for China, really moving forward over the next 15 years versus the last 40 years. And Ron, I'll let you explain it. And then the one on the right is then the commodity index, the Bloomberg Commodity Index that we're hitting 6-year highs on. And love to just kind of put the question out to you guys. Where do we think that this global demand for increase in protein, and then obviously the growth of China, is going to shift our markets? How is it going to shift our markets? So Ron, go ahead and give us a quick explanation and then leave it open question here to the group.
Yeah, it's just the projected growth in China. Their economic growth is on fire. They've come out of the COVID. If you go back 18 months before we had a trade war, before we had COVID, China was growing at a fantastic rate. And then you had those two external events, kind of freeze things. Well, we got a new White House, we got a vaccine. You remove those two situations and looking in the long term, China's going to continue to grow, and they predict this is their goal. So for the next 15 years, they want to grow at a rate that would take it at a greater growth than they've seen in the last 40. So they're on fire. That's what's going on in China, and that's not going to slow down. We saw you would have thought COVID would have slowed them down. It didn't. They're going like a banshee. And then so what does that mean for the global outlook on commodities? Well, there's a number of things that we see going on in that the global marketplace has been absolutely flooded with funds from the Central Union, from the European banks.
Right, liquidity, massive amounts of liquidity.
Right. So where's the money going to go? Well, if Tesla stock price is worth more than the next 7 car companies combined, why can't cotton be worth $2? I mean, if you just look at the relative values that were out there, it's not we aren't talking about the worth or the value of the commodity. We're talking about the price.
Right.
So we can see a lot more upside to this, to all the markets in general. And back to something that we heard Kevin talk about, the lack of labor for the slaughterhouses. The USDA numbers that have come out, we understand from the USDA themselves, they're having a difficult time getting their people out to do what they do. And we see the numbers that have coming out of the USDA on cotton are just absolutely fairy tale. It's like last month, it was almost unchanged across the board, despite some major deficiencies. Right. And what we found over the years is if the USDA has to make a correction, an adjustment.
You mean to tell me that they go back on their statements?
Well, that's what they never want to do is reverse a trend. So let's just hypothetically say they've got a 2 million bale adjustment in some column. They don't want to say 2 million bales and then the following month have to come back 500,000, right?
Right.
So what they'll do is they nibble at it. They'll take, I know I got a 2 million bale adjustment. Okay, we'll put 1 million up and then we'll see what happens. And that's the essence of why the old line, big crops get bigger, small crops get smaller. It's because they tend to implement their changes over time. And certainly in the cotton side of things, from our customers on the ground in India, they have been holding India's stocks anywhere from 5 to 10 million bales too high. And that adjustment has to come at some point. The cotton just simply is not there. So when we look at our USDA numbers, we always hold the US data is way more influential to price than the global numbers, simply because it's a US crop, it's a US contract. So there's a stronger correlation. But there was both a reduction in US ending stocks and world ending stocks. And what I've been telling my customers since we made the bottom in April, we immediately figured in the COVID disaster. Prices plummeted. Since then, if you look forward, I always say, hypothetically, I said, pretend you're on a deserted island and you look behind you, and now you see our tidal waves, pirates, and sharks in the water, right? Looking forward.
Where are the naked women?
Yeah, naked women, an SOS boat, something's coming. So the way I look at it, demand is on the improve. So, cotton is a long dated. I mean, from the time you plant a seed to put on the shirt, you're talking 18 months. We are seeing today just absolute crazy book orders at the mills in Bangladesh, India, Thailand, Pakistan. And what that's telling you is that the low inventory of goods on the retail shelf is immediately being felt back at the production end. So there are mills now buying call spreads because they can't get their hands on the physical cotton. So it tells me that demand is getting better. We're going to come out of this COVID deal at some point. So from a rough sketch, demand goes up. Supply, it's going down. So any market anywhere where demand is increasing and supply is declining, that's a price positive event. And I think that's what we're looking at. And I don't think cotton's the only market in that situation.
Jody?
Well, Ron's exactly right about the USDA's glacial pace to address things, because what I believe we saw it in the September report of this year, 2020, regarding corn. They made an adjustment that had to have come from the 2019 crop that they had overestimated it they made a cut somewhere that made no logical sense on how they got to it. So it becomes frustrating from that standpoint that the market is working on inefficient data, put it that way. But if you look at where all the stimulus money and just the euphoria of everybody being able to go back to hop on a plane, to drive and see your friends and family, just get out and do, and there's going to be a massive economic recovery. And you can see that, even though this week sadly the worst highest number of deaths in a week from COVID in the United States, you've got the stock market trading within a couple ticks of new all-time highs and over 30,000. So it's we're in the Gretzky business. We're trying to figure out where the puck's going, not where it's been. And where it's going is, in all commodities, there should be a very substantial and very long-lasting upward demand trend. For the next several years.
I'm going to chime in to throw a little salt in that to make it taste better. Is that the dollar weakness is going to come home to help us? You know, you could go back in history and you look at the way the weaker dollar is higher commodity prices, and you know, you look at the charts. The dollar it's sad. It's headed south. It's a bear market. It may be a crowded market right now because a lot of the specs are on the short side. But as long as it continues lower, that's supportive for all the commodity prices. So that's another factor I think we have to watch. You know, something else, and this gets into the weeds a little bit. I don't want to bore the people that are chiming in here, but you know, the speculative flow of money is now counting a heck of a lot more than the traditional fundamental trade or commercial led business. You know, we used to say, and we still do, that the specs got more money than the trade got cotton. Right. So when they come in to move, it's significant. And here's something that happens every time you go from one contract month in cotton to the next. We have a carry in that market, right? So the trade will, you know, cover their shorts. Specs are going to buy and have to run their longs forward at a premium. Okay. And they do it, and that's fine. But what people get caught up in, they miss, is that many of the big hedge fund managers and money managers, they can't be experts in corn and be an expert in cattle, be an expert in gold or silver. So they tend to look at the charts, and that's a fail safe for them to look at everything. Look at it. What's the technical aspect of it? When you look at a weekly continuation chart or a monthly continuation chart, when you make that transition from one contract month to the next, you oftentimes get what looks to be to an uninformed observer, a big jump in the market. And we just saw this in cotton at 160 point switch on the weekly chart just from one day. Now,
yeah, we see that all the time in energy and other things. Right. And it's always a psychological moment in the day. Wait a second, did this contract roll, or is it really a big move? Right.
Right. So we come in next Monday. All right. 3 days will actually start Sunday night. Compared to where they looked at it last Monday, we're almost 500 points higher.
Right.
So they don't know the difference between a bale of cotton and a bale of hay. They just know that this chart took off. Momentum players, you know, first thing it's going to do, no one's going to want to short this market. Secondly, momentum players are going to go, well, this thing's on the run. I want to play that game.
Right. Well, you mentioned earlier the liquidity that's been injected in this markets, and then there's really, where else can you get yield? And so people are going to drive into commodities. Yeah.
Jody so astutely pointed out, when money comes into the market, it's not coming in on the short side. Right. And Kevin was saying that too. So here you got all this money looking for a home, and we're providing a very attractive home just by looking at the chart. So you just have to deal with that as an external reality and know that it's going to have an effect on the markets. So that's something we always keep tuned into. Watch the managed money flow. That's the key.
Yeah, Kevin, do you have anything else to add to the money flow comments here before we wrap up? We're kind of getting close on time, so I'll let you have this last comment, and then we'll wrap it up.
No, just to reiterate that there is a lot of money in the livestock markets for trading funds. So kind of backs up what you're saying, Ron.
How about La Nina? Are we gonna talk about that this time, or are we gonna wait until it beats the shit out of everybody?
I actually wanted to do this because I feel like people ask me all the time, what is La Nina? So somebody's got to give 30 seconds, describe La Nina. How does it work, and why is this one so bad? So who wants to be the gopher?
The warming of the water in the equatorial Pacific causes La Nina, and the cooling of it causes El Nino. And when you get to the extremes, like we're at extreme strength of a La Nina right now, that's when you get the higher chance, not certainty, but a higher chance of having either a whole lot wetter weather or a whole lot drier weather. You get to the extremes on the scale when you have either one of those really strong or really weak, La Nina or El Nino.
What our weather guy explained to me, because he was trying to talk to someone who didn't know about weather, was, the jet stream mixes things up. And when you get a strong El Nino or strong La Nina, it tends to allow whatever systems are in place to remain in place without the jet stream mixing it up. So instead of getting a regular on and off rain shower, you'll get no rain or you'll get constant rain. So we just we know it's not going to be normal, and typically not normal turns into not good yields. And that's just something I think that we all have to watch out for.
And I was on a podcast yesterday with Scott Irwin from University of Illinois, and question came up related to if you start to get fewer amounts of rain or snow, even in the plains here in the U.S., ultimately moisture, that's a problem moisture-wise for farmers, because they need the snow. They need that to get into the ground. And, if we're not getting it in the U.S., then suddenly, we're staring down the barrel of the gun of South American impacts now. But what happens to us in the spring, right?
Well, if you look at the drought, go ahead, Ron.
I was just gonna say rain makes grain, so if we don't get it, we're hurting.
Yeah.
But if you look at the recent drought monitor maps from NOAA and the USDA when they put them out, the way last summer ended for the entire western part of Iowa and eastern Nebraska, that drought has actually expanded because they haven't caught up on anything. They haven't had the heavy enough snow. And we can talk about, okay, it's raining in South America. It's not. You have got to look forward to, if we get to March 15th and the subsoil profiles are no better for the western corn belt, and that's Dakotas, Nebraska, Minnesota, Iowa, then you've got a much bigger story. You hate to compare anything to 2012, right, but you certainly have a setup of, you have a very large potential weather problem in the middle of historically tight stocks to use ratios around the world. So to me, this South America thing is going to be interesting, but if it doesn't start raining and you get some replenishment in the Western Corn Belt by March, April, you've got a story that you can't even, you really can't comprehend what the world would have to do to ration the demand that's coming. You could have the perfect storm of a lot of bad things happen.
Well, let's hope for the best, and but plan for the worst, right? I mean, that's what we have to do, and that's why we're thinking about forward pricing and marketing, and it's going to be on the top of everybody's mind here come January. We start getting out to some meetings. Jody, you going to be traveling here in January? What's the plan? You going to be on these Zooms every week?
Zoom every chance we get, because I think the industry, and just the fact that you have to get 50 farmers together or a big enough meeting to have a decent meeting, that until we get to a position, probably I'll be surprised if we even start doing heavy duty travel and meetings by next fall, that everybody's going to need to get their two shots, and then you'll see everything reopen. But
what's Brady going to do without a companion pass?
Oh, I don't know where he's going. Hey, he doesn't want to. He loves this. He doesn't have to go anywhere. He just wanders around downtown Nashville, wondering where all the tourist girls went.
Yeah, to be young, and he's definitely our ace in the hole. We can live vicariously through him. So, all right, gentlemen. Hey, thank you so much for taking the time today, guys. I thought this was a great discussion. At the end of the day, if you're a reader, not a listener, and want to catch up on the daily news from all three of our experts here, we publish research every day in cotton and in grains, and then once a week in the livestock markets, lean hogs, cattle, and then Kevin also publishes some trade recommendations from a meats perspective. So, gentlemen, I appreciate all the time today. I appreciate the work that you do, and looking forward to catching up with you guys again together as a group. On these moving forward. So, thank you.
Have a great weekend.
Yep.
Weekend. Thank y'all.
See ya.
You've been listening to The Hedged Edge. Links from this episode will be in the episode description of this channel. Follow us on Twitter at ag_RCM, like our Facebook page under RCM Ag Services, and visit our website, read our blog, and subscribe to our newsletter at rcmagservices.com. If you like our show, introduce a friend and show them how to subscribe. And be sure to leave comments. We'd love to hear them.